back to the watch list. I'm Nicole Petalides. Philip Palumbo's with us, CEO, Chief Investment Officer, Palumbo Wealth Management. Great to see you again. I remember when you were here at the New York Stock Exchange. Wasn't that long ago. How are you feeling about the market?
Yeah, good to see you, Nicole, as well. It's really interesting as it relates to the market, right? A lot of investors are getting very emotional about the current market and the Trump policies, which I understand. The reality is that the Trump policies are monumental. And because of that, it's going to create tremendous uncertainty like we're seeing. And with the uncertainty is going to create volatility. And markets, we know, really do not like uncertainty. And on top of that, Nicole, the forward multiple of the S&P 500 coming into this year was around 22, 23. And when Trump was president the first time around, the multiple was around 16 and 17. So markets today are priced for perfection as it relates to AI, and also priced to perfection as it relates to the pro-business policies that investors are waiting for.
So as we are looking this and you're trying to give advice to investors, what are you telling them? Because you have certain sectors that you think could work.
Yeah, so a couple of things. So with the volatility, that means, and the uncertainty, that means volatility will increase from here. But investors have to be thinking long term. So for me, I think we're going to see a move towards quality, which we're already seeing as we speak right now. And one of the biggest things that I'm a proponent of is owning stable businesses that have stable earnings, lots of free cash flow, high returns on invested capital. And when you own businesses like that, especially if you got an economy that is slowing, which we're starting to see, especially on the consumer side of things. And so quality to me is going to win in 2025. It's the 493 stocks that didn't win as technology won the past 2 years. So I think that's what we're going to see this year. On that front, though, on the sector front, I like biotech here. I like biotech here because I think that with rates up, it hurt the sector overall. But I think we're going to see some breakthroughs. We're seeing an aging population there's going to be more and more demand for medical breakthroughs. We're going to see AI create medical breakthroughs, increase diagnostics a lot quicker. We're going to see M&A pick up in that sector. And I think that's really going to be helpful overall for biotech. So I like biotech a lot. On the energy front, with the price of crude down, I think that energy has gotten to reasonable levels, and there's some businesses out there today that look attractive to us. Occidental Petroleum is one of them, that we're looking at. When we look at OXY, they're trading below fair market value of about 20-25%. And what's most interesting about OXY, it has been a bad underperformer, relatively speaking, since April of 2016 when Holub took over the company. But and a lot of that is on the back of an Anadarko purchase, which saddled the company with debt. We believe management now is cleaning up OXY, which is a positive. They're thinking more about repurchases in the future. Their dividend is strong. And now they're one of the largest oil and gas producers in the world. And in the Permian Basin, they're big players there, and it's a cost-efficient way to produce oil.
It's interesting because you also had JP Morgan, Bank of America for your financials. You had Adobe for a software pick, right?
Yep. Yeah, so on the financials front, so if you look at financials during Trump's first presidency, financials really rallied and performed well. If all goes as planned and his deregulation goes through, the extension of the tax policies and potentially getting corporate tax rates down, all that will bode really well for financials, specifically in the M&A category, which has been really slow over the past 3 years. If that can pick up, that'll bode really well for financials. So JP Morgan, for me, and really any company that we own within our portfolio, it's all about management and leadership. And I don't think there's a better leader out there than Jamie Dimon. I mean, JP Morgan is the largest in the world. And the best thing about JP Morgan is their risk controls. Their risk controls are the best in any Wall Street bank out there. And they're very well diversified amongst consumer banking, investment banking, wealth and asset management. So I like the banks a lot here as well. On the technology front, on Adobe. So Adobe is a business that we made an investment in a few months back that hasn't gone well for us. We took about a third of the position, and we still have to add more to it, which we recently did. Adobe's biggest concern for investors is competitive pressures, number one, and then number two, their AI investment, seeing some type of return on investment. I believe investors are overdone on this. The stock has come in here 36% off its high. I think it's got a bright future ahead of them. I don't see their margin deteriorating as a result of competitive pressures. It's trading below fair market value, tons of free cash flow, high returns on invested capital. So we like Adobe a lot here as well.
Oh, that's good to hear. I mean, overall, you still have some concerns. I mean, tomorrow we have the PCE print. You still have some concerns about inflation?
I do, yes. It's interesting. I spoke about before the Fed starting cutting rates back last year. He talked about inflation getting to 2%. Inflation's not at 2%. So inflation's not at 2%. Why are you cutting rates? And I think the Fed realized that, and that's why the Fed is on pause. And I think he's going to surprise the market by being on pause for a lot longer than the market expects. So inflation is going to be sticky here. And I think it's going to be sticky here for a while, which is another reason why that's problematic. So the other issue that we have to worry about besides Trump policies is inflation being sticky and the Fed possibly making a mistake.
Yeah, and that's the whole thing. I mean, and Trump also putting out a lot of new policies. He may have to undo something. I mean, he's been tough talk on the tariffs, right? But these policies overall lead you to be more positive. I mean, in fact, it was funny to see the dichotomy between the CEOs who seemed more positive and the consumer sentiment, which was a little nervous and negative, right? You saw that?
Yeah, absolutely. So the thing is, and the reality is that business people are optimistic about Trump policies, and they're optimistic about Trump policies because when you deregulate and you extend tax cuts and possibly try to bring tax rates down, and Trump is a pro-business guy, that builds confidence in the business community. Definitely in the short term with all the tariffs and potential trade wars. I mean, that is an issue and that's a concern. But the reality is, if you go back to his first term, and I spoke about this in an article I read about tariffs, is the reality is markets performed well in 17, they performed well in 18. 18 was an okay year, and then 19 it performed well. And Trump imposed tons of tariffs. CPI did not go to 4, 5, 6%. It was tamed the whole entire time. So for me, that gives me some confidence that Trump's a negotiator. He'll negotiate, get what he wants, which will be favorable to our country. And I think overall, the economy could then move forward and remove some of this uncertainty that we have right now.
The 493 stocks in the S&P 500, right? The ones that maybe were ignored a little, and you gave us a lot of the names that you like here. You had Northrop Grumman, JPM, Bank of America, OXY, Adobe, just to name a few. What do you say about those Mag 7 names now? I mean, do people ask you and say, I want to buy them? When should I buy them? Yeah. We just finished talking about Microsoft, which for 1 year is actually down. Yeah,
so I'm still a big believer in the Mag 7. The thing what investors have to understand is that there's been a ton of money being spent on AI, and it's been overspent. And I believe investors now are going to start saying, hey, you're spending all this money. Where's my return on the investment from a shareholder standpoint? And I don't think we're going to be able to prove that there's been a high return on investment that many of these companies are making. They're all trying to get ahead of the game. And I think multiples got ahead of the game as a result of that. So we're not going to see multiple expansion in these Mag 7 companies anymore. We're really going to have to see earnings expand to make up for to really get into, to move into where the multiple is right now, which I think is going to be difficult to do. So I wouldn't be surprised if we start to see contraction in the multiple in these businesses, and then they'll get at levels that'll be favorable for investors to then start buying again. In my book of business for my clients, we own many of these Mag 7s, and I'm not looking to sell them because they're phenomenal businesses. Right. They have lots of free cash flow. So for me, we're long-term investors. We don't get nervous about short-term moves. We think things will correct. We're not going to get nervous out of them, though.
Okay. Philip Palumbo, great to see you, CEO, Chief Investment Officer, Palumbo Wealth Management. Thank you very much.